right, and we are live for the audience. Hope the audio is good. And now I'm going to introduce the panel. Hey, everyone. Hey, guys. Oh, awesome. Everything's working. Thank you for coming to this afternoon session to talk some economics with some awesome professors. We also have people on the live stream. And I'm going to hand it off to Bitcoin Motorist right here, who will introduce our guests and be the moderator. I will try to come up with some additional good questions. And hopefully this will be an awesome panel. So I'll hand it off.
All right, welcome everybody to the Bitcoin Lounge presented by Embly. Just want to take a moment to thank Embly, our sponsor, for putting this awesome space together here at PorcFest. So my name is Patrick. I'm Bitcoin Motorist, joined by Vays. We have Peter St. Onge, who is with the Mises Institute and Heritage Foundation, amongst many other glamorous organizations. And I also have with me Dr. Peter Newman, who is with, who are you with, Peter? Patrick, I'm sorry. Yeah. I forgot his name because he's got the same name as me. Dr. Patrick Newman, go ahead.
I'm also with, hey, thanks for having me on. I'm also with the Mises Institute, and I'm a professor.
Right into the mic, like as if you make
direction.
Okay, yeah. Already we're off to a good start. I'm with the Mises Institute as well, and I'm also a professor at Florida Southern College in Lakeland.
All right, fantastic. So today's the topic of today's talk is something that's very near and dear to my heart. I love the Austrian economics of Bitcoin, but I think a lot of times we need to find out. We're going to touch a few things. We're going to touch a little bit on El Salvador and Light Network, but I want to start with 1971 because I think a lot of people forget, including Bitcoiners, even hardcore Bitcoiners forget that this fiat system that we have is not the way it's always been. It's a very, very short-term experiment that happened. We're coming up on the 50-year anniversary here, coming up in August. In 1971, Nixon put an end to the Bretton Woods system. Nixon basically took the world off of the gold standard. And this has been just a radical short-term experiment. This is not the way it's always been. And Bitcoin fixes this. So I do want to, maybe we'll start with Peter on this one. So what do you think? Can you think of anything off the top of your head? What hidden thing it is in the economy that has been kind of messed up because of this decision? I mean, when Richard Nixon took us off the gold standard, he said it was temporarily. I don't think he could have gotten away with it if he had told everyone it was permanent. So what is it that you think brought this about? Was it a lot of the spending of the 1960s, the Great Society, the Vietnam War? Did that bring about what happened in 1971? And what is it that's happened afterwards that has been such a bad result from that?
For sure. So the context around that era was the guns and butter, right? And the idea was that they had the Vietnam War going on. They had all these new social programs that they wanted to put in, and all this stuff together was very expensive. And traditionally, they would have had to make choices, right? They would have had to cut spending in one area to increase in another. And Nixon's terrible innovation was he said, well, screw it, we can have it all. And they went off gold. They just went ahead and increased spending. They didn't worry too much about inflation. And what that sort of led to over the next 50 years now is this massive increase now in the expansion of government, right? And part of that spend money, but when you increase the amount of money going into government, it's going to take on new powers. They're going to do something with that money. They're going to hire bureaucrats. Those bureaucrats are going to find some way to justify their salary. We would maybe prefer they do nothing and just go on vacation, but alas, they don't. And so we've had a growth in spending, power, government across the board.
They still get paid when they go on vacation. Go ahead, Patrick. You wanted to add to that?
Yeah, so the whole idea with Bretton Woods is before we were on what was known as sort of a loose gold standard where the dollar was, at least you had $35 to be exchanged for 1 ounce of gold, not by the public, not by the domestic U.S. citizens, but by foreign governments and large banks. The issue was we were overspending, as Peter was saying, and that was causing gold to leave the United States. So Nixon took us off the gold standard in August, I believe it was August 15th. This is the end. He was trying to prepare for his 1972 re-election, and by taking us off the gold standard, this drastically reduced confidence in the dollar. So this contributed to the high inflation, the stagflation of the 1970s. And since Nixon took us off the gold standard, we'll be on a total fiat system. The only thing constraining central banks are central banks, which basically means there's nothing constraining central banks. And we've had a massive distortion in interest rates, misallocation of capital, not only in the United States, but in other countries that are also, their currencies are not backed by gold. So it's been a, as was mentioned by Patrick over here, it's been a unprecedented experiment in fiat money, and we're heading to the 50th anniversary of it. I hope we don't have to deal with another 50 years of this.
Somehow, I don't think we will. And I think that one of the triggers for Nixon to take us off the gold standard was Charles de Gaulle in France, who was actually demanding their gold back. They were actually trying to follow the rules, which is to redeem it. And wasn't there something really weird that happened where they actually sent a battleship or something to New York City to actually pick up their gold? Was something like that happened? What was the story behind that? Can you elaborate on that?
Well, yeah. So the idea was the United States, our dollar was basically the world reserve currency as it is now. The only difference is foreign countries such as France could redeem their francs for dollars, or could redeem their dollars for gold. So initially in the 1950s, everyone wanted dollars. So we were actually running surpluses. We were running trade surpluses. People were buying dollars. By the 1960s, as we started to give more foreign aid to try and fight various communist countries, we were overspending for Vietnam, we're overspending for the war on poverty. People will start in France, other countries, West Germany, Britain, Japan, etc. They started to accumulate more dollars and dollars. They started to get nervous, right? Because it's basically just like fractures or banking. If a bank is issuing too many liabilities for the reserves, people are starting to get a little nervous. So France, Charles de Gaulle in particular, etc., they're saying, wait a second, is the dollar really as good as gold? That was the idea. Well, it's as good as gold. You can redeem it for gold. They started to present the dollars to France, excuse me, not to France, to the United States, to redeem their dollars for gold. And gold was starting to flow out of the United States. So if this continued, Richard Nixon would either have to practice really contractionary monetary policy, which is going to hurt his reelection chances, or he was going to have to suspend convertibility, which would have caused a panic by dollar holders, or he was going to have to devalue, take us off the gold standard. He naturally chose the easy money option of taking us off the gold standard, and of course, continuing to pursue expansionary monetary policy in anticipation of his reelection in 1972.
And yeah, sorry, go ahead, Tom.
No, I was gonna say real quick. So the warship, the picking up the gold. Actually, vaguely remember that. I don't really know the details, but my guess would be that the warship was needed to protect the gold going back to France, a problem that Bitcoin solves.
Actually, that's a very good point. A lot of people don't look at it that way. They just know that the warship was sent to New York City as a threat. But yeah, that makes more sense, especially with France. But actually, I don't remember if it was Peter or Patrick who touched on this point. So you talked about the stagflation of the 1970s, but there's been a lot of actual harm that's been done to the economy that a lot of people don't even realize with an unsound monetary system. And specifically, I think that this hurts the manufacturing base of the United States. So it hurts a lot of these blue collar workers, maybe some of the lower class or lower middle class workers, whereas the upper classes, they do fine with an unsound monetary system because they can buy art or real estate or invest in stocks, things like that, which can appreciate in value. So they don't really care that how the blue collar workers are hurt by this. So can you elaborate on it? Is there something in the economy that has been hurt to say lower class workers or blue collar workers because of the unsound monetary system?
Yeah,
Go ahead, one of you guys.
Yeah, without a doubt. That's been one of the main factors that has hit poor people, hit blue collars. You frequently hear that it was possible to raise a family and to have a good living with a blue collar job back in the 1950s. And once you've got this institutionalized inflation year in, year out, that very specifically hits the working class, poor people. It hits them a lot harder. Inflation tends to hit the kinds of things that poor people buy harder, right? So rent goes up, whereas houses also go up. Now, if you own a house, that's essentially neutralized, right? If you don't own a house, you're slammed by inflation. You've had just enormous jumps in inequality that, you know, if you look at a long chart of inequality in the US, it just really started taking off in the 1970s. Now, a lot of this is seized on by the left as, you know, capitalism is broken, or, you know, this is why we have to rein in greedy corporations that are, you know, impoverishing workers. No, if you actually look at a chart, businesses have always been greedy, okay? They always try to, you know, create the most value at the least cost. This is why we love them. They create the many good things. No, if we actually look at the rise in inequality, we had companies in the 1950s as well. The inequality came when we got this institutionalized inflation that was hitting the poor and redistributing effectively income away from the poor and towards the rich.
Quick question, quick follow-up. Doesn't it bother you how the socialists always expect capitalism to work instantly, but their programs require 50+ years to achieve success, and that's supposed to be okay?
Oh, absolutely. Every imperfection on earth is an excuse to destroy capitalism and install socialism. All of socialism screw-ups are, we didn't quite do it right. We're gonna do better next time.
Or just give it more time.
This time with feeling. That's always the argument the socialists use. Sort of building on what Peter said, I mean, inflation is a hidden tax, right? Money, is the Austrians emphasize, is non-neutral. So it benefits the early receivers of the money, right? It redistributes income from the people who get the new money last, and it gives it to the people who get the new money first. So when the Federal Reserve prints money, increases the money supply, who gets the new money first? Well, it's privileged, basically investment in commercial banks on Wall Street, okay? So their real income is going up. Who gets the money last? It's the teacher, it's the person on a fixed pension, it's the blue-collar worker, etc. So inflation is a hidden tax. This is why governments have always used it, because actual taxes are way more unpopular, and it's redistributing income from the lower class to the upper class. And of course, what happens is now when you have this income inequality, this hidden tax hitting the lower classes, well, then you're going to call for more socialism. You say, well, we got to do, oh, this is capitalism, this isn't a central bank and all the crony capitalism causing this. It's due to the inward nature of capitalism, et cetera. It just magnifies the problem. Well, now we need to give more money to the poor people. We need to print more money for them, not realizing that the higher prices is caused by the increase in the money supply. So you're only just magnifying the problem. This is the issue, and this is why we got the housing bubble. This is why we got the stimulus checks that's now leading to higher inflation, et cetera. So inflation is a hidden tax. It's one of the worst weapons that governments can use.
Right, and when Patrick, what you're talking about is the Cantillon effect. Hopefully I'm pronouncing that right, but that's a very, very important part of it, which kind of escaped my mind when I was asking the question, because it's also that they you know, the investor class, they get access to the funds first, and then therefore they benefit from the money printing more so than the blue collar workers and the ordinary consumers. Now to go off of this, Peter, I want to ask you. So how does Bitcoin fix this? Because I think we all up here believe that Bitcoin will fix it, except for maybe Tone. Tone always likes to disagree with me, but we all think that Bitcoin will fix this. So how does Bitcoin fix this? And well, do you have an opinion on what's going on right now in El Salvador and how we come out of this? What Seyfuddin Ammous says that you know, the unsound money system harms all of culture. You know, it harms our art system, and you know, we get all these weird you know, woke movements going on, and you know, we get to, you know, the climate change, all this fiat science going on with that stuff. So how does sound money fix this? And if you could tie it into what's going on right now in El Salvador with the dual legal money system or legal tender system that they have going on.
For sure. So on an individual level, Bitcoin acts as a lifeboat, right? It allows you to escape not only the inflation effects that we're talking about, but you know, there's another whole section which is growing government surveillance, governments trying to control what you spend, trying to look at it just because they're curious about you. So it's a lifeboat on an individual level. Now, on a broader level, the more people who get in the lifeboat, the less livestock they have to milk, right? Every livestock that comes out of the pen, well, they have two choices. They can either take less or they can milk the remaining suckers harder. And they're not going to be real happy about that. So in a sense, Bitcoin creates a benefit for all, even no coiners get a benefit because it brings the reckoning faster. What was the other question? El Salvador.
Yeah.
El Salvador, glorious El Salvador. All right, what they've done is fantastic. This is something that no economist, skeptical or pro Bitcoin, nobody predicted. This was a lightning bolt. Very, very clever. Now, I think they did it because they did what they could with what they had. All right. And what they had was a country that was already dollarized. It lacked a national currency. That meant you didn't have that built-in bias towards their national currency. They already had essentially the infrastructure for this foreign imported legal tender. And so they said, well, let's just grab another one. As long as we're playing with external legal tenders, let's pop this one in. Absolutely epic, ingenious. The way they've structured is that nobody is forced into it. We can talk about Article 7 at some point. Nobody is forced into it. If you don't want to participate, you can instantly transform any Bitcoin you receive back into dollars. All right, and that gets past a whole number of problems that people like Larry White have been raising, right, about volatility. You know, the volatility of Bitcoin is likely to continue for a while until it does reach its sort of final form of commonly used money. So it avoids a whole number of problems. The assumption had long been that in order for Bitcoinization to occur, all right, in order for countries to use Bitcoin as a common money, there would have to be some terrible trauma for the US dollar. We'd need a zombie apocalypse, a meteor strike, we'd need hyperinflation. All right, that was always the assumption because it didn't occur. It's embarrassing. It did not occur to the economics profession, at least nobody who wrote it down, that you could just do dual tender. You don't need the US dollar to die. Fine, keep the US dollar. It's good for the noobs. It's good for the, you know, for the process while the volatility calms down. It's like a bridge that gets us over to Bitcoinization. So absolutely astounding what El Salvador has done. Now, Saifuddin, you mentioned his cultural concerns, and this has been discussed for a long time. Saifuddin has really been great about raising awareness of it. When you have a society that has very low interest rates, right? Interest rates fundamentally come from a natural time preference, all right? A natural sort of future orientation. And what fiat money and these sort of suppressed rates have done have been to bring on this society where rather than building things out of granite, we build them out of plastic, right? And that's duplicated across the world, right? You can see it in art. You can see it in pop culture, right? Where we go from Beethoven to Cardi B. Apologies if there are fans here. There's a qualitative difference between the durability, the appreciation of longstanding skill and art built into these things. And right, absolutely, Bitcoin moves us towards a world where you can get back towards those natural interest rates that promote more of a long-term orientation.
Go ahead, Patrick. You want to answer that?
Oh, no, so just to add, building on what Peter was saying regarding the decline, what inflation, some of the effects it leads to. I mean, one additional thing, I don't think it's a word we've used yet so far, is debt. Inflation, and particularly among the middle class, the lower class, leads to a massive buildup and accumulation of debt, and that debt acts like a time bomb that really can destroy the family, can destroy a lot of the cultural institutions you've been talking about. It makes people much more present oriented, at least to the extent, because now they think we live in a world where I think a large amount of people increasingly with debt think that, oh, the government's going to bail us out or cut down on the debt in the future. They're going to cancel student loans. They're going to buy off our mortgage. They're going to do something, etc. And that's really bad because go alongside any sort of promotion of cultural values market, you got to have an emphasis on savings. If you take away that motive for savings, you're going to lead to a decline, really, in civilization.
Hey, Patrick, what about the thought that, hey, if I think that the dollar is going to go into hyperinflation, why don't I take on as much debt as I can and now pray for hyperinflation so I get to keep all my shit for free?
That's certainly something that many people would start to argue and start to do once you see inflation expectations take off. People are going to take on debt with the expectation, again, like I said, it's self-fulfilling. They think that, well, the government's going to bail us out or the debt's going to become worthless. The issue is, of course, once people expect inflation, you're going to see a rise in the nominal interest rate. But again, they think maybe they can trick the lenders right now, get some unanticipated inflation, which we're seeing this year, by the way.
Real quickly, let me put on my economist hat on right now because I have taken some upper division economics courses. But wouldn't taking on additional debt, wouldn't that increase the demand for the dollar and therefore have some sort of a counter effect against inflation? Or am I misunderstanding something?
Well, if you take on additional debt, what that would do is, let's say the public is going to borrow more, so the demand for loanable funds is going to go up. So everyone, hopefully you're drawing the graph, supply and demand graph right now. Now, so the demand for loanable funds is going up, that's going to raise the real interest rate, and that can cause foreigners to at least invest more in the United States because they want to get that higher interest rate, boosting up the dollar. Now, of course, that's one effect. You're going to see many other effects that could occur, particularly if this is going to continue to occur. People don't think that the run-up in debt is sustainable. They don't think the government's increased borrowing is going to be credible. They think a default will come along the way, et cetera, and that can lead to, of course, once you start to see inflation, that's going to lead to a depreciation of the dollar.
And this is one of the reasons why I think that that I think that the Bitcoinization is not going to come from a collapse. I think Peter was talking about that earlier. It's going to be kind of a slow-moving trend towards Bitcoin, where you can have both a national fiat currency like the U.S. dollar and Bitcoin side by side as dual monetary, as dual legal tender. And you wanted to say something about Article 7, which I believe is from the U.S. Constitution regarding legal tender laws. We'll go ahead. Yeah, go ahead and say what you want to say about that.
Yeah, sorry. In this case, Article 7 is part of the El Salvador's Bitcoin law. And that's been somewhat controversial among libertarians. It compels people to accept Bitcoin, okay? And the reason that he did it, strictly speaking, there are some, I would argue, purists who are upset about, I mean, for sure, I think all of us agree that legal tender is an abomination. What makes this particular article unique is that usually governments compel you to use their garbage money for debts that you've already contracted, okay, but not for point of sale. And so that's the innovation here. And so that is, you know, that's attracted some criticism from libertarians. Now, the reason that he did it is because he phrases it as discrimination, right? If somebody is being paid in Bitcoin, or if they are using Bitcoin for remittances from another country, right, which is, that's always been recognized as a really good application of Bitcoin, he doesn't want these people to be socked now when they try to spend those and have to convert it, right? So you can make a very practical argument. Requiring acceptance also, you know, sort of standardizes people on Bitcoin. It's very, very good for spreading adoption. And I would just add that in the grand scheme of the outrage, absolute outrages that we've seen over these past 18 months in what we previously thought were free countries like the US or Canada or Britain, all right, to get upset about Article 7, I think is comical. Get a grip.
Yeah.
Oh, one more follow-up on Article 7. So according to Article 7, everyone has to accept legal tender, right? So how are U.S. businesses getting away by saying we do not accept cash? You have to use a credit card.
Generally in most countries, it's called a, oh God, offer to treat. Yeah, offer to treat. I believe it is. At any rate, in most countries, you have a fair amount of discretion on what you can accept at point of payment. All right, so if you want to be paid in maple syrup, if you don't want to take $100 bills, okay, there is some discretion. You don't have to take cash. You can take credit card only. All right, so that's a normal state of affairs. In what they did in Article 7 specifically is that they said you must accept Bitcoin, specifically Bitcoin. Now, they have a government facility where you can instantly swap your Bitcoin out using, in practice at the moment, the Strike app. Strike is not legally privileged in El Salvador. Strike is partnering with them. Many of you know Strike, Jack Mallers and his team. They are extremely upright people. They have stellar reputation within our community. They have a stellar reputation within El Salvador as well. The president is a massive fan. It is open to any app provider in theory, but the idea is if you are a pupusa seller and a tourist pays you in Bitcoin, you can instantly swap that through this government facility, which is built and maintained initially, it appears, by Strike, so it will be somewhat competently managed. You wouldn't normally expect that from El Salvador. And so that will allow people to instantly opt out into dollars if they want to. All right, and so the point here is that people who want to keep their savings in Bitcoin can. Most people will probably keep some transaction balance in Bitcoin, much like you might keep some money in your PayPal or your Venmo account, right? It's not your life savings, it's something close to your checking account. And then if there are some people who are uncomfortable with Bitcoin, there are people in the world who believe it's a scam or they believe it's too volatile. And fair enough, for those people, they can opt right out. They can stay in dollars. The two can live in perfect harmony. There doesn't have to be conflict between the US dollar and Bitcoin.
Now, one thing that I wanted to ask you about, I think a lot of us are excited about El Salvador, but tell me about the future. Like, what is it about El Salvador that that is such a great thing that they are recognizing Bitcoin as legal tender? Because they are a very dollarized country, and a lot of people are speculating that this could mean that other Central American and South American highly dollarized countries will follow suit. Now, what do you think? Why do you think that is? Do you think that there's a difference between a country that uses a lot of U.S. dollars versus a country that uses U.S. dollars less? Like maybe Venezuela, I'm sure they use U.S. dollars there a lot too, but maybe less than they do in, say, Paraguay or someplace like that. So what do you think the difference is? Why wasn't it Venezuela that adopted the Bitcoin first? What's your opinion on that, Peter? What do you see for the future of this domino effect on this?
Yeah, so Venezuela is actually functionally dollarized. Those of you who were at the talk yesterday, Larry White cited that. Most transactions in Venezuela are occurring illegally in US dollars. Now, Venezuela is not that fond of the United States. They have some conflicts, and so it's unsurprising that they want to go with their own garbage currency for the time being. There are, however, what's I think doubly exciting about El Salvador. So El Salvador was an ingenious, really a very, very lucky pick. It is a sympathetic country. It's got a lot of supporters. It's been an underdog for a long time. It's been beat on by the U.S. specifically, by many countries. It is a very sympathetic country. They are dollarized. Remittances make up about 22% of the GDP in El Salvador, which is comparable to what oil does for Saudi Arabia. All right, it is impossible to overestimate. Remittances are huge in El Salvador. So simply by allowing Bitcoin for remittances, that is tremendous for the Salvadorian people. Now, typically people who are receiving remittances, the reason they're getting remittances is because a family member went to the US or some other country and they're sending money home. For the most part, these people are not coming to the US because they want to. I'm sure they're very thrilled to be here. However, they have left because of extreme poverty for the most part. They would rather be home, maybe with their kids, with their family, with people they grew up with their abuelitas as they're getting older. They don't necessarily come here to party. All right, so these are relatively poor people. They are sending money to their even poorer families back home. So, this is, the president has talked about this a lot. This is very directly the people who wanted to help with this. So El Salvador has been an absolute stellar choice. It's also, I think, for Bitcoiners worldwide, it's very exciting because there are a couple of features of El Salvador that a number of other countries share. Right, so one of them is that there are other countries that are similarly dollarized. They've basically given up on their own currencies because they screwed it up too many times. So like a drug addict, they came in and said, we're going to quit the hard stuff. So there are dollarized countries, Ecuador, Panama, Liberia. There are countries with high inflation all over the world. Now, some of those countries care. In other words, they're democratic enough to actually care about it. So countries like Ghana, Nigeria. There are other countries with very high dependence on migrant remittances. So most of Central America, India, Philippines, there's a number of other countries where migrants could really get a boost from this. There are also countries targeted by US sanctions. There's about 20 different countries that enjoy some level of sanctions, suffer, to be clear. And that list is constantly growing. The current administration seems interested in punishing more countries. Those countries may have a hard time accessing dollars, countries like Russia. And so they might be interested in being able to access a currency that is outside the control of the US. And then finally, you simply have a lot of countries that have a lot of tourism. One of the motivations for El Salvador was to bring in people who want to spend Bitcoin. And there are many countries, for example, all across the Caribbean, there are countries where tourism is absolutely, it's really the only industry, who may be interested in copying this. So as we bring more countries into it, it normalizes it, it gives more cases for other countries to follow, and hopefully it'll inspire, right? There are politicians across the world who are interested, they have the laser eyes. We don't have any presidents yet who have live bills that are sailing through Congress, but we can look forward to more countries joining.
I have a much more simpler answer. The president of El Salvador cares more about the people of that country than the president of Venezuela cares about the people of his country? It's a really simple answer, and that's why it happened. As for the currency part, real quick, I mean, there are so many technicalities in announcing that Bitcoin is legal tender. I think the same like effect, or like 90% of that effect, could have been made without like laws, just saying, hey guys, you're allowed to use any currency in our country, and you will not be criminally prosecuted for using currency. You want to use dollars? You want to use euros? You want to use Japanese yen? You want to use Bitcoin? We don't care. Everything just, it helps. It's freedom. You can pay with whatever you like, whatever someone else wants to accept, you can pay in it. So just the comfort of knowing that, like right now in the US, you may or may not be breaking the laws of the Bank Secrecy Act with a Bitcoin transaction. We don't know. But if there was an announcement saying you're not, you're allowed to use Bitcoin if you want to, just like what happens if the coffee behind us is, if they're accepting euros, is the government going to show up if you're accepting euros? We're not even sure actually, but probably less likely for the government to show up than if you're using Bitcoin. But that's just my view on it.
Oh, no, I was just going to say something very concisely, and it's deregulating legal tender laws, which is a tremendous improvement from monetary freedom and competition. So again, any sort of deregulating, liberalizing legal tender laws gets an A+ in my book.
Go ahead, Peter.
Yeah, I just wanted to add one final point that a very important consequence over the next couple of months is going to be how regulators digest this. All right, in the U.S., there's an entire, it would make you sick, you wouldn't be able to sleep if you read through the regulations that they put on the financial sector. It's disgusting. It's corrupt, it's driven by neocon, crazy people. Once, and a lot of it is discriminatory towards crypto, towards specifically aimed at Bitcoin. Now, once Bitcoin, if it is regarded regulatorily as a foreign currency, a whole world of these regulations, restrictions, threats, punishment, they just fall off like scales, because there's a much, much lighter regulatory load put on the Canadian dollar in the US financial system than there's on Bitcoin. And this is the case across the world in all financial systems.
That's very interesting, because not only is it, does it maybe it forces deregulation because there's certain rules on accepting foreign legal tender, but also it might just kind of force corporate adoption too. I mean, a corporation that operates in El Salvador, if they have to update their systems to accept Bitcoin in El Salvador, I mean, it's just they just have to press a button to update that for the whole. So McDonald's, I don't know if there's McDonald's in El Salvador, but I'll use them as an example. If they're accepting Bitcoin in El Salvador in their terminals, they're going to automatically just use that for America, I think. So all these countries, at least these corporations, will learn how to accept Bitcoin. So I think that's another kind of a Trojan horse type of thing with this regulation. Go ahead, Tony, you had a comment on that.
Yeah, no, that would be really interesting, because like as the example, McDonald's, or not McDonald's, but a smaller global company is doing that, and now they're out competing McDonald's, right? And also, what happens when their employees need to also get paid in Bitcoin, and that particular McDonald's ends up with some savings in Bitcoin, and all of a sudden, the McDonald's in the middle of El Salvador is the most profitable McDonald's out of all the McDonald's in the world. Like what does the CEO of that company do? I mean, man, why aren't we accepting this thing across all of our McDonald's around the world? So you bring up a really good point.
Go ahead, Patrick.
Oh no, I was just going to comment. I mean, this is something that governments, they don't want corporations to start accepting it for this very reason, and that's why I think they're very nervous about the El Salvador thing. They would like to somehow squash it. Whether that's going to happen, of course, that's going to get harder and harder as more countries start to do this, etc. But I mean, it is going to pose very interesting. A company could get serious advantages by being able to start accepting Bitcoin. And then they're going to actually have some government, such as El Salvador, at least some area where it's going to be okay for them to do that. And that's going to, it could cause it to slowly spread to bigger countries, et cetera. And it's going to be a big headache for governments, but it's promising for people who want to use Bitcoin.
Very good points. And then, So, Peter, do you think that this could have happened, say, 2 or 3 years ago? Do you think that the Bitcoin network was ready to accept this kind of attention a few years ago? Because Lightning Network wasn't really up and running. Lightning Network has been kind of lagging the past few years. It's been kind of flat. You were showing me the chart how it was kind of a dead technology, and then all of a sudden, starting a few months ago, it just started to spike up again. Do you think that this could have happened back then, or what is it that caused the sudden big surge in Lightning? Do you think it had anything to do with strike, or do you think it had anything to do with the fact that the mempool was kind of clear for a number of years, so there was really no need to use Lightning? I know I kind of threw a lot of things out there, but go ahead, answer what it is you want to answer, then we'll go to Patrick's answer.
That is a really good point. That as exciting as El Salvador is, I think really what's happening with Lightning Network, to me anyway, is equally exciting. I try to avoid mentioning a specific company by name because it feels shilly, but honestly, what Strike has done is astounding. And I hope many countries enter the space. I wish them well, but I hope there's a lot of companies that enter that space. But the idea is these sort of payment apps, right? Things like Apple Pay, Venmo, that work for Bitcoin. That is a game changer. Yeah, Patrick, we were talking about it earlier. Lightning Network, to my mind, had been dead. It essentially been dead in the sense that it had a lot of potential. Larry White yesterday mentioned it was a Brazil. It had a lot of potential, and it was always going to be that way. And I was waiting, year after year, usage by various measures was basically flat for 2 years running. From about March 19, you had a big jump going into early 2019, and then it was just dead. It was doing nothing. I mean, it was flat, which flat in our industry is dead. And then starting around May, just a couple months ago, and I think that a lot of that was Strike. Interest just took off. So currently, Lightning Network is growing at an annualized rate of 635% per year. All right, that is alive. All right, that this bonfire is cooking now. And so what that means in my mind is that a lot of these debates, even yesterday during the Soho debate, there's a lot of outdated narratives that no, Bitcoin can't work because it takes 40 minutes and it's going to cost you $20 in your fees. No, that's the old world. It ain't that world anymore. All right, in this world, they had a transaction down at Bitcoin Beach, 20,000 transactions. Total fees were $4.98. All right, you're talking 1/40th of a penny per transaction. All right, your credit card is several percent for starters. Right, you got fees on both sides. You got your fees, their fees. 1/40th of a cent cannot be beat. If you can beat it, the customer doesn't care. All right, can you get it to 1/50th? I don't care. When you're buying a coffee, you care beyond 1/40th of a penny. So at that point, this whole industry of MOE coins, Doge, Bcash, Ripple, all this stuff, whatever argument you had for it is gone. All right, at instant transfer and at 1/40th of a penny, that's gone. So as exciting as El Salvador is, what's happening with Lightning Network, I think I am very excited.
All right, so we're ready to wrap up here. Tone, I know you're a huge fan of Lightning, but you haven't really adopted Lightning yet. Did you have any comments on what Peter was talking about in Lightning adoption?
No, and I was actually very happy that Lightning wasn't used all that prevalently the last few years because it gave the developers a chance to work in peace. And it's incredible how hard that can be. Like one of the reasons why it took so long to get Lightning development up and running was because it took forever to fix transaction malleability to get SegWited. So the same people that were that delayed SegWit by over a year, those same people were the ones that were demonizing Lightning. And this is the mentality as always, like the day SegWit was finally in, and the day developers could start programming on Lightning, these same people were screaming, well, where's Lightning? Where are these transactions? It's like they expect everything immediately. Like here's another example, and happened right there in the live chat. Right now, I'm just going to read the second comment from the second to last comment. I saw a video about a family trying to use Bitcoin in El Salvador. It was an epic failure. Yeah, it's been around there for 3 seconds. Okay, give it time. It was like right after the news. Francois Coppola who I got into a huge argument with on Twitter. She's like, the only way anyone can exit El Salvador's Bitcoin is through an ATM. And there are just two Bitcoin ATMs in El Salvador. I'm like, yeah, the news was announced yesterday. I'm like, are you gonna write a retraction when there are 200 ATMs by end of year? And I was wrong. I should have put 2 zeros behind that because I already have firsthand accounts of over 1,000 ATMs being shipped there from one company. There will probably be 1,000 ATMs by end of year in El Salvador. And there are people complaining that there's only 2 right now. Yes, right now. Can we at least give it a month?
What a time to be alive. We are watching some historic thing happen. We are watching the monetization of an asset for the first time in history in real time. I'm ready to close it out. Does anybody have any final thoughts? I don't know if Tony, you want to sign us out, or if Peter, you have anything additional to say?
Well, we've got some people questions, guys.
Okay, yeah. Do we have audience questions? I didn't even think about that. So thanks for reminding me. Anything from the live chat, Phil?
Well, I got questions. You know, we're talking a little bit about it. Like, what kind of backlash do you? I know you guys aren't. Well, one of the questions is a little more legal, and the other question is a little more economic. So the legal one, I'm a little worried about Jack Mueller's and Strike because it's a U.S. company by a U.S. citizen, and he seems to be working a lot with a foreign government. Is that normal, even in the world of economics, other than officially sanctioned through the World Bank and IMF?
Honestly, I don't think that's an issue. I mean, people from, about half the tech entrepreneurs in Silicon Valley are from different countries. I mean, honestly, I don't think that's an issue. What I do think is an issue is regulatory backlash, right? World Bank, IMF. Yeah, sorry. So that is a concern. Fundamentally, the hostage, right? What they had to hold over El Salvador is that they can come up with KYC, money laundering. That's their standard line of attack if they don't like something you're doing, and then they go after your financial system and they try to wreck your banks. They've been deploying that against so-called tax havens. They have the tools. I think a lot of it is just gonna be Bitcoiners have to call them out. We got to raise awareness. When they go after a country like Ireland because its taxes are too low, there are not, 100,000, 1 million strong army of passionate defenders of Ireland's 12.5% income rate. Okay?
Cyber hornets.
Cyber hornets. So, I mean, El Salvador is going to need our help, I think.
Yeah, no, I just want to build on what Peter was saying, is that the regulatory threat, I mean, governments will try to do anything they can against companies that are accepting this, or they're either with taxes or selective antitrust enforcement or increased regulation of other activities. And that's just going to be their sort of cat kind of clawing. It's like they're worried, so they're going to attack or sort of lash out at this. Because any sort of market money like Bitcoin going against fiat currency is going to cause governments are not going to go down quietly, and they're going to keep fighting. So that's why it's going to take basically a very dedicated network or group of people to keep fighting it. Because if not, then it's just going to get taken over. But Bitcoin has the potential to actually do that, to fight against these various laws. But the more and more countries that adopt it, it will enhance the standing of Bitcoin to be to survive those attacks.
Any other questions for Peter or Patrick?
No, but you guys are doing amazing work. It's not easy to find economists that are on the right side and in support of Bitcoin. So yeah, we'd love to have you guys on the show another time in the near future. Hopefully, I'll see you at future conferences. And yeah, it would be great.
Thanks for having me on.
All right, thanks guys. All right, we're gonna go ahead and sign out, and thank you very much for today. Do we have anything else on the calendar today for this?
Not for tonight. So I know I'm going to go see Dave Smith in the pavilion.
When is that?
That's at 6 o'clock in the pavilion, so I don't want to miss that one.
All right,
also,
cool.
Tomorrow morning at 10 a.m. we're going to start our programming with Bitcoin and a Cup of Joe with Tone and Joe, and then we have our schedule available. So come check out what we have. We've got some stuff planned for you guys tomorrow, including the VIP party. So VIP party is tomorrow night. Don't miss it. We're going to have a poker tournament here as well. So come check out the VIP. Yeah, VIP party is going to be here. Cool. Yeah, so come get your tickets for the VIP party because you don't want to get left out. So yeah, that's it. I'll throw it to you, Tom.
All right, no, thank you guys. So for I'm gonna do some screen share. Everyone wants to know what the price of Bitcoin is. But for the audience and the live audience here, I guess we're signing out. Thanks, guys. Oh wait, where do people find you? So I will have your uh, Twitter handles and stuff, but if you have like channels and stuff, so like where can people find more of your work? Because Austrian economists are a very rare breed.
Yeah, no. So I mean, I'm on Twitter, Dr. Patrick Newman. You can find more of my work at the Mises Institute. I've got a book coming out on cronyism, a lot of monetary cronyism in there. It's called Cronyism. It's coming out in October. So again, you find me Mises Institute and Twitter.
And I'm also on Twitter, Prof. Stange, Prof. St. Ange, and I do a Substack on economics and Bitcoin.
All right, thank you guys. Yeah, feel free to come up, ask these guys questions. And I got a bunch of business cards right there for my YouTube channel. I keep forgetting to announce that.
Good.
Very good, man. Amazing.
All right, hey guys.
I kind of felt like
Good.
I started following you, so I'm just getting into it. But I like your language.
I saw the live audience. If you don't mind, like just right on the side there, that'd be great.
YouTubers.
Yeah, I'm not familiar with guys here, but I just reading your blog and I like your. I didn't realize I was.
Hey guys, let's look at some charts.
I would have been a little more starstruck, but it's all right. I was coming over.
So the way I look at it is, what happened is how everybody and your grandma, your kids, your 20-year-old cousin, everybody has to put their.
All right, guys, I'm gonna pull up some charts here. See what's changed. Wow, I like the really bright sun. Oh, it's okay. I'm on a live stream with you in like 5 minutes, and I'm just gonna glance at the price real quick, and I'll walk over there. Oh, it got really windy just now. Let me turn off one of the mics, probably be less wind then. All right, then we'll stick to the other mic. All right, here's the weekly chart. That is a beautiful looking weekly candle, but look at the body of that candle. The body of the candle is still about to close at its lowest weekly close that we've had since like January. This is not a good sign, guys. That's not enough. That's not enough to be ultra bullish long term yet. We really need a weekly close at least near the top, which is at about $38,500, $39,000, which is what's really needed on a weekly scale. Here's the daily scale. I talked about this at the end of my last video. This was my worst case scenario projection. I really wanted to see an MRI buy at the low because that would be my buy the dip. The worst case scenario is an MRI buy after a big rebound. We saw what happened when the same exact situation occurred on a weekly scale. And this was not a good MRI buy opportunity as a buy. And I was very, very hesitant, even though it was an MRI buy. And the same exact thing is playing out on a daily chart. Could it end a little more bullish this time? Maybe, I don't know, but I do have resistance right at the top of this channel and also right at the moving average. In addition, you are entering potentially the top of that channel after a brand new swing low. So the momentum to go straight up to new all-time highs is very, very hard. At the least, there's going to be one more pullback, and I would rather buy the next pullback maybe at 35,000 at the same price as now, but I'd rather do it on the swing back than right now. So right now I am in a wait and see position. I do not see this as a buying opportunity on a daily chart. Now, if you bought, if I bought the hourly chart, the 1 hour chart, had I bought the 1 hour chart right here at the low, and I obviously had reasons to buy it right here at the low because that was an MRI buy. Had I bought it here, I may or may not have taken profit and I may or may not have gotten back in, but that was a good buy on a short-term scale. And then it turned into a longer-term buying opportunity. All right, guys, this is it for me. Just a quick update because it is kind of loud and people do want to ask me questions as well. And I am at the event and I want to give people the time at the event. I don't think I'll be streaming anymore today unless we are streaming the poker game or a chess game. It's a big chessboard behind me. I haven't even had a chance to play yet. I only play chess like once a month, so at best. So I do kind of like it, and a lot of these guys are better than me, so it's the only way to actually get better at the game. All right, guys. Thank you all so much for watching. I will go ahead and cut screen share. I can zoom out the camera a little bit, and you guys can see what is going on behind me with PorkFest. And I've been coming here for 4 years in a row now, and it's pretty fun. It's a good way to hang out. It's infiltrated by a lot of shitcoiners, and we're doing our best to set them mentally straight. Okay. Oh man, considering it's like Gay Pride Month, or I'm gonna get a lot of trouble for that statement, but you guys know what I mean. All right. Talk to you all on the next one. Bye, guys.